Hello, thank you so much for joining us today. If you would, go ahead and open up the chat window. Tell us who you are, where you're from, and if you've already started the home buying journey, where you are in that process. And if you have any immediate questions, absolutely add that as well. So today we want to share with you how to get from the very beginning stages of buying a home all the way through all of the steps to sold. And of course, we're going to answer any questions you have as we go. So these are some of the topics that we want to cover with you today. And that's, so you want to buy a home, understanding agency, because there is a lot to understand about agency, and we'll dive into that. Pre-approval, everyone always wants to know when and why. Home shopping, making an offer, contingencies, and what are contingencies, negotiations and what that means for you, offer accepted, and now what? Pre-closing and title work. Yes, there is title work. Closing, and then any final thoughts that we have. So you want to buy a home. This is me. This is how you reach me if you have questions after the webinar today. And I'm sure you want to know what qualifies me to be here today and to share this information with you. So some of my credentials, I have a seller representative specialist designation. I have the pricing strategy advisor certification and the accredited buyer representative designation. All of those together are things that first-time home buyers would be very eager to have, or should be eager to have, because they help you throughout the process. So if you are looking for a realtor, look for someone that has the accredited buyer representative designation. That's the first and foremost step. The realtor commitment. We are bound by the code of ethics, honesty, loyalty, and professionalism in every single transaction. So why I created this course. To me, this is near and dear to my heart. As a realtor, we run into people all the time that just have never ever bought a home before. So for us, it's important for us to be able to share the different steps and processes of buying a home. So it is a huge decision, likely the biggest decision that you will ever make in your life. And we don't want to take that lightly. You'll want to make sure that your investment is going to be worth just as much when and if you ever decide to sell it as when you bought it. So these are all great goals, but how do we start the process? Now, if that's one of your questions, then you are in the right place. Today, we're going to share the process from the very beginning to the very end, so that when you are ready to begin your home buying journey, you will know that process. Please keep in mind that there may be a one-off situation that may not be addressed during this course or this webinar. This is not all-inclusive. There are scenarios that happen that won't be covered today, but this will cover the general scenarios. So understanding agency, this is a big one for many, many people. In the context of real estate, the duties of a real estate agent can be summarized as follows. We have a fiduciary duty to our clients. That means agents must act in the best interest of their clients, prioritizing the client's interests above our own. We have to obey with loyalty. Agents are required to be loyal to their clients, avoiding any actions that could conflict with the client's interests. Obedience. Agents must follow lawful instructions from their clients and cannot act against them. Disclosure. This is a big one. Agents must disclose all material facts that could affect their clients' decisions, but we must also stay in our own lane. In other words, I can't say, hey, this home has structural issues if I am not a structural engineer, or hey, we can't get this financed because I am not a lender. I do not have those credentials. Confidentiality. Agents must keep client information private and not share it without consent. Accounting, agents must handle client funds with care and transparency. And reasonable care and diligence. Agents must exercise reasonable care and diligence in their work to protect their clients' interests. These duties are absolutely essential for maintaining trust and integrity in the real estate industry. So it's a lot, and probably stuff that you probably don't even want to know for the majority, but it helps you understand the mindset of realtors and what that representation means. Now, there are several types of representation. There are buyer's agency, seller's agency, and dual agency. If you are a buyer, you will want to work with the buyer agent to protect your best interest and guide you through this process, including contingencies, negotiation, all the way to the very end. If you choose to not have a buyer agent, then you are either, number one, representing yourself, or number two, you're also using the seller's agent. There's something important you need to know about using the seller agent, and that is that the seller's agent has a duty and a loyalty to their seller. So anything that you tell a seller's agent, they are obligated to share that information with their seller. Important to know. Now, that seller now has a competitive edge in any kind of offer, including contingencies and negotiation. Like, for example, if I went to a home and I took a new client in, and that client says, I absolutely love this home, I need to have it no matter what the cost is. And if they had a camera there, then that seller has a competitive edge. On the same token, if I'm now the seller's agent and I've opened the door for you to come into the house and you give that same statement, I want this house no matter the cost, I'm now obligated to tell the seller, hey, you're going to pay big bucks for this, so don't bargain, stick to your guns, you know? So it's important to know that. If you choose to have that same seller's agent be a dual agent, however, this must be approved in writing by both the buyer and the seller and the seller's agent. At that point, the agent cannot advise either client. It's important to negotiate. It's important to discuss this because we cannot negotiate at that time. Once we are a dual agent, all we can do is pass the paper from one person to the other and explain what it says. We cannot negotiate, we cannot advise. So let that kind of sink in for a moment, that if you have dual agency, you in fact have no representation. Let it sink. If everyone agrees to that in writing, however, by law, it is permissible. So pop over to the chat window and tell me what type of representation that you will be looking for when you start your home buying journey, if you have not already. All right. So now we're going to talk about buyer representation agreements. And I just kind of really want to focus in on this for a minute. So right at this moment, these are not required in West Virginia by law. However, the NAR, which is the National Association of Realtors, requires them. So for us in West Virginia, we are still required if we are a realtor. So what is a buyer representation agreement? So following the lawsuit settlement, the National Association of Realtors mandates that buyers must sign a written representation agreement with their agent before touring any properties. This new rule ensures that buyers are protected and that agents are compensated for showing homes. Who compensates the agent is decided within the agreement. Now, the agreement must include specific details about the terms and conditions of the representation. Here's the best part, though. Talk with your agent to decide the length of the agreement. It can be for 6 months. It can be for 1 day. It can be for one property. And honestly, I will tell you, I would prefer someone want to do a one property buyer representation agreement so we can make sure that we are a good fit for each other. I think that's important because you don't want to get stuck in a buyer representation agreement with someone that you really don't have any connection with, or that has a very different personality from yours that you can't find a middle ground on.
Can I ask something, Stephanie?
Yes.
What's typically, what do you see with buyer representation agreements? How long is it usually? Is there a standard, or is it really just what you have that conversation with that realtor?
I'm glad you asked that. So the quick answer is we are not allowed to say a definite timeline because it is all negotiation.
Okay.
Everything is negotiable. I see a lot of agents putting 6 months. There are quite a few that do 3 months. But here lately, since this has become our requirement, there are more and more single property buyer agency agreements.
Okay.
Does that
Thanks.
answer the question?
Yep.
Perfect. Thank you. I love the questions. So I do like to do a property specific agreement just to make sure that it's a great working relationship prior to jumping in with both feet. But I will tell you, it's really good if you do have a good working relationship with someone, go ahead and cement that relationship, because otherwise you're going to be starting over every time you get with a different realtor, and you're not going to be moving forward. You're going to be getting the same criteria. Whereas if you've been to me 3 times, I already know what you like and what you don't like in a home. So I'm able to fine tune that search a little bit more. And that's going to be with any realtor. It protects the agents and it protects you as well when you're able to do that. So it's not a bad thing at all. The buyer representation agreement, it protects you, it protects your agent, and it's just kind of gives you an opportunity to fine tune your search and more of a speed path. It gets you where you need to go. All right. One other thing that's in the buyer representation agreement is the commission. And I'm not going to dig too deep into commission because commission is set by agreement between the buyer and the buyer's agent. It's a negotiation. So here's the simple, quick, easy answer on commission. Whatever amount you decide on, it needs to be written in that agreement, as well as who will pay that. If the buyers cannot afford to pay that, they can request for the buyer's agent to say, I only want to see these properties, or can you show me only these properties? And the buyer's agent will show those properties. Or if by chance the buyer's agent cannot determine if the seller is willing to pay a buyer agency, because they really shouldn't be able to tell that now by looking at a listing. They should be able to offer and request that in the contract or in the offer that the seller pay for it. If the seller does not want to pay, sometimes we'll offer a little bit over. We'll come back with a counter offer over what the initial offer was to include that amount in with the offer. So there's ways around things, but you have to be very open and honest with it. Does that make sense? Mm-hmm. Okay. Well, let's move on to the next slide then. And I absolutely love this slide. If you can dream it, have the courage to take action and have the right tools to help you achieve it. And guess what? The 3 of us here today, we are the right tools for this webinar here today. And of course, you can reach out to any of us, and we're going to talk about that here in a few minutes, if you ever have any questions at all. So pre-approval, when and why, believe it or not, these questions are things that I hear all the time. Why do I need a pre-approval? So I am going to just jump in right here, and I'm going to say that I would prefer a pre-approval right up front, not for myself. And this is kind of a misconception because a lot of times people say, if you want a pre-approval up front, I'm not willing to work with you because then you're only interested in how much money I can buy for. And that's not the case at all. So having a pre-approval, in my opinion, tells you what range to be shopping in, so you don't get your heart broken on something you can't afford. And you're also not shopping for something that is well below what you can or would be able to afford and have to make so many repairs, or you're just not happy in that price range. I think it's important to know. And of course, there's always the scenario that someone might have bought something recently and it's changed their loan to value or debt to income ratio, you know? So you're going to hear more about that here in just a moment.
Can I add to just kind of the flip side of that too?
Sure.
I see sometimes people just don't think that they can get a house. They don't even know where to start. And with the pre-approval, that's step one. At least I'm going to tell you that's step one every time.
Yes, because, and I want to introduce you here in just a second too, but there are so many renters out there that are in that same scenario that you're talking about.
Mhm.
So let me go ahead and jump in here and introduce you. This is Maxwell Fitzgerald with Stockton Mortgage. Maxwell, can you give us an idea all about the pre-approval process when you recommend it?
I think that's the first thing you do when you're looking for a house. And kind of like what I was saying is if you're afraid that you don't know what you're going to qualify for, getting pre-qualified is just calling me and me asking basic questions and then letting you know what you can afford and what the loan looks like. So it doesn't cost you money to do that. So a lot of people, something else that people think, oh, I don't want to call a lender because then I'm stuck and I don't know what I'm doing. That's not true. Calling me and figuring out what it looks like, that's always step one. And then you can call Stephanie and do the fun part, which is find the house that you like.
So how long does it take to find out what I could be pre-approved for?
If you called me, you'd find out how much you qualify for in about 30 minutes. 30 minutes to an hour, depending on how hard it is. But no, it's right then. It's same day. I work it up and figure out what you can afford, what loan programs fit what you want to do, whether it's low down payment or if we have credit issues and we have to work on that. It's instant. As soon as you call me, I'm working on it. So
Max, one other thing here, that this pre-approval is for the buyer, correct? So
yeah, it's
they
for
don't
the
have to share what their max amount is with the realtor. They just got to give a ballpark figure what they're willing to shop for in the market. Is that correct?
correct. I would always say that communication is the most important thing, though. So your realtor that's representing you, they work for you. They're part of this team that we all work together. So always let them know what you want. But you're right, Philip. You don't necessarily have to tell a seller that. If you qualify for $400,000, but you look at the payment and you know that's too much. I don't feel comfortable with that. I don't feel good about that. That's okay. No one's forcing you to do that. We figure out what the maximum is just so that we know. And maybe $200,000 is a house you love and a payment that you love. Then you would get a pre-qualification letter saying what you needed to say. But we would figure out what your max is too, just so you know.
I actually run into this quite a bit, and I ask them, number one, what does their pre-approval letter say? Number two, what range do you want to shop in? And I know that's not something that every single realtor does, but we're trying to get better at it so we can make sure that we aren't going to put someone in a house that they cannot afford, even though the numbers look good. Sometimes you have extra expenses come up or you're trying to save.
Right.
So you've got to have money set aside for some things sometimes. So you
Right.
know, it is a valid question.
Yeah. So, and then I don't know, Stephanie, I've got a bunch of things. Stephanie invited me to talk just from the lender's point of view to first time home buyers. I have a bunch of stuff I wrote down that I think would be helpful to know. If you guys are okay with it, I'll just start. I don't have fancy slides, but it's all important stuff and you guys can ask me questions while I'm talking about it. So.
Thank you.
The first thing that I've got written down is if you've never done this, you shouldn't know what you're doing, and that's okay. If you've never done it, we know that you don't know, and just ask questions. There's no such thing as bad questions. And then to Philip's point too, and to Stephanie's, communication is the most important thing in this entire process. So if you're making an offer and Stephanie has that same question where she talks to the buyer and trying to figure out what the range is or what you're comfortable with, that's what I'm here for too. I know Stephanie. Stephanie can call me on the cell phone anytime she wants or send me a text and we can talk about it and figure out what is best. So that's why it's so important. If you're a first-time home buyer, you want to talk to people that are local. If you're trying to go to something online, you don't know who you're going to get each time you're talking to them. You can't get a hold of them after 5. It's a mess. You talk to people that live here, that actually work together every single day. That's how you get to your dream home. So I think that's really important to know as a first-time home buyer. That's probably the most important piece of advice you'll hear. So.
I ran into that numerous times where some of my clients are saying, well, I've got to talk to my lender to see if I can afford this. And then because we're wanting to go up in price range, by we, I don't mean myself, I mean
Right.
my clients, but they need to talk to their lender, but their lender is one of the companies that you find online. And
Right.
they can't get hold of them until Monday again, or until the next day. So they're stuck waiting the whole weekend and end up missing out on a house because it's under contract now.
Yeah, you can't operate that way. If especially if it's your dream house. I've seen that happen before and it breaks my heart, but that's true. Where you need to get a hold of somebody and it might be 8 o'clock at night, you can text us. I mean, that's what local means, is you've got people that actually care about you and they don't care what time it is. They'll always be happy to help. So yeah, that's the most important piece of advice. Everything I say, that's the one thing I would say is the most important, is use people that are good at what they do. And that's the people that are local.
Yeah.
So, okay. So the things I wanted to talk about, I know Stephanie's going to go in depth. So I'm just going to give you a quick breakthrough of the process. She'll do her side a lot more detailed, but just from a lender's point of view, I kind of want to tell you what it looks like from start to finish when you're getting a loan. Also, I want to touch base on what's important things to know as a first-time home buyer. I wrote down a couple things I think would be helpful. And then finally, what not to do, because that's important too. So stick around for that one because you need to know what not to do too. So, the process, I've got it broken down into 7 different steps. You can break it down into however you want, but here's a quick bullet points of what you need to do. So step 1, how we were just talking about, is getting pre-qualified. And you call me or any other local lender and they will ask you basic questions: name, phone number, date of birth, social security, what you make, what kind of assets you have, stuff like that. Then we look at different types of loans. So there's hundreds of different loans, and I'll go over a few. But what fits for you is different for everybody. So that's something that we talk about when you call me. I'll figure out what I think works best, and then we go back and forth and figure out what sounds best to you guys. So that's the first step. Next is you talk to an agent, local agent, and find a home. So that's the fun part. Stephanie's job is the fun job. So you would give her a call, or any local real estate agent a call. And now that you're pre-qualified and know what you want, then you get to go look at the houses and start dreaming of what's going to be where and all that stuff. So Third step, once you find a house and you get under contract, get me your documents. And honestly, you can get me your documents as you're looking for a house. I'd prefer you get them to me as soon as you can. But there's basic documents that I need from you, and I've listed them out. Sometimes they're different depending on your situation. If you're a self-employed borrower, or self-employed buyer. Sorry, I say borrower because everyone's a borrower to me, not a buyer, but it's the same word. But if it's just a basic buyer, here's what I typically ask for. So you might want to write this down. Your driver's license, social security card, 30 days worth of most recent pay stubs, 2 months worth of bank statements, and then your past 2 years W-2s. So those 5 things are typically what we ask for when I'm getting you pre-qualified. So the next step is once I have everything and you're under contract, your loan will go into processing. And what that means is there's a processor, there's someone that works within Stockton or whatever lender that you choose, and they're going to review everything that you submitted, all your documents. They're going to order an appraisal, and they're going to do verifications of your employment. If you've worked a couple different places over the years, they're going to call them and make sure that you did work there, how much you made, all of that.
Can I ask a question?
Yeah, of course.
So you talked about ordering an appraisal. Who pays for that when?
So the buyer will pay for that, and it's the only thing that they pay for upfront.
Okay.
It is baked into when I go over the numbers. So the first step when I get you pre-qualified, I always do a very detailed email on everything, and I call you and we go over it so that it makes sense. But part of that email, there is a cash that you need for closing. It's always included. So that number that you've got in your head of how much money do I need to buy this house, it includes your appraisal.
Okay.
But your appraisal is the only thing you pay before closing. So when you actually get to the closing table, since you've already paid that appraisal, you won't have to pay that again. It comes off of the number I told you from the beginning.
Perfect.
So,
Thank you.
yeah, and that's just because appraisers go to the property before we finish, and they require their payment before we close. So that's the only reason we do it that way. Otherwise we would collect it at closing.
Okay. Thank you.
Yeah. Something also processors will do once they're going through your documents, if they have questions about stuff, they will send you and me an email, me and the buyer, of what else that we need to get, if anything. And I help with that. So that's also important to know. This whole process, I'm always there. So your local lender is always going to be a text away, and they're going to help you do everything. So if the processor needs extra stuff, we'll help you get it. So, next step is the appraisal comes back. Hopefully the house appraises for what you're buying it for. Sometimes it doesn't. It usually does. I don't know if Stephanie has the same experience, but typically realtors know how much houses they have to do a market analysis. So typically it will appraise for what you need it to, but sometimes it doesn't. And I put a note in here just to say this because I think it's important. What do you do if it doesn't appraise? There's 3 different things that can happen. There's really 4, but typically there's these 3. Either the seller, if you're close to the purchase price, it barely appraised under, typically a seller will lower the purchase price. That's not guaranteed, obviously, but that happens more times than not. You have to renegotiate is really what you have to do. You'll go back to the seller and let them know this is what it appraised for. What are we going to do? So the seller can lower the purchase price. If they refuse and you still love the house, then the buyer can make up the difference. If it appraised $2,000 under value, you can bring an extra $2,000 to closing and still buy that house. The bank can't give you more than it's worth. So my loan that I'm giving you can only be what it appraises for. It can't be more than that. So The third option is you can do a combination of those two things. If the seller is willing to budge a little, but not all the way, maybe you guys can figure that out. So, but like I said, most of the time, seller will come down, but it just depends on every situation. So,
Max, if I may jump in here, the
Yeah.
appraisal is the value of the home and not the condition of the home, which would be the home inspection.
well, correct. Yeah. So Phillip is a home inspector and he's got a lot more knowledge than I do on home inspections. All I'd say with home inspections is get one. They're very important. I would never buy a house without a home inspection, because it's going to be the most expensive thing you buy, and they specialize in telling you what it is. They're going to go through everything with that house in fine detail, stuff that you wouldn't know. So yeah,
Maxwell, my question was more, some people I think it could get confused in there that they think they get their appraisal back and they're good to go. And they don't sometimes realize that that's two separate pieces to the puzzle.
correct. Yeah. So I think probably where it gets confusing is the appraiser they have to do an inspection of the home. So they are doing the value. You're right. That's what their job is, to tell us the value. But depending on the loan that we choose, the house also has to pass certain guidelines. So that appraiser could come back and say, here it appraised, you're good, but here's some mandatory repairs. And typically, an appraiser, they're not a home inspector, so theirs is not as nearly as in depth, but they're going to call out the safety issues. So I'll see if there's stairs without a handrail, they'll say something like, we need to get a handrail installed. Outlets that don't have covers, they'll say something like, you need to get covers on the outlets. So yeah, that's probably where it gets confusing, is an appraiser will do that, but
I think a lot of times the easiest way to kind of get it straight in someone's mind is a home inspection is good for the homeowners to know what's wrong with the house, what's right with the house, and maintenance. Whereas an appraisal is for the lender to make sure of the pricing and what needs to happen in order to meet the guidelines of the loan, like you were saying. So the home inspection for the buyer, the appraiser for the lender.
right. That's a perfect way to say it. That's 100% true. And like I said, you need a home inspection. You don't technically, but you do, because it's that important.
It really is. This is something we always recommend, just because you don't know what you don't know, as you said earlier. So if you can't see something, or you're not qualified in something like Phillip here is, then I would never know there's a problem with wiring. And he would walk right in and say, oh, this is something you might want to take a look at.
Yeah, exactly. It is that important too. That's when I have a conversation about getting pre-qualified, I do always say, you probably want to get a home inspection too, because this is a big investment. You want to know what you're buying.
Yeah.
So yeah, it is that important. So, next step, if the appraisal comes back perfect, we're going to just say it's perfect. Then we'll go into underwriting, which an underwriter is another person that works at my company. And what they do, they're kind of the final gatekeeper. They'll go through everything one last time, and they'll tell us if we're good, if we're cleared to close, or if there's any other conditions that they want. Meaning they could ask you for extra questions that they might have. So that's pretty much the process. The last step is closing. We end up at a closing table. You sign 4,000 signatures, and then your hand starts cramping, but you own a house. So that's really it. That's the whole process.
Go ahead. I'm sorry.
That was it. That was everything I had written down for buying a house for the process.
So one of the questions I get a good bit of time is, what happens if the appraisal comes back higher than our contract price? Do I have to pay the difference? And it's not, but I'll let you address that.
If the appraisal comes back higher, then we celebrate. It's just good news. It just means that you've automatically got equity into the home. You're buying it less than what it's worth, which fantastic. If you can buy something for less than it's worth, that's always good news.
And
So
that is
change
equity.
anything about the loan, all your numbers stay the same, but you just bought something for less than it's worth. So good job.
Yep, that's your equity. So
Yeah.
I heard you mention pre-qualification earlier, and I know we have pre-approval on the screen. Would you like to explain the difference between those?
I can. So there technically there is a difference. But people use them interchangeably. So if
Okay.
someone says pre-approval or pre-qualification, typically they mean the same thing, but technically they don't. So pre-qualification means that I've reviewed your documents and I ran everything through my system and the computer came back and told me that you would be qualified. Pre-approval means that it's actually been to underwriting. So you can have an underwriter look at the documents and they can stamp it approved. In fact, you can do that before you even do anything. It doesn't happen as often. Usually you just get a pre-qualification. But if someone, the times I would typically do that is if it's a complicated buyer. If they own their own company and it could be a trucking company and they pay mileage out, anything. If it's complicated, we typically do a pre-approval. Just get it through so that way we know we're not gonna have problems. It's already went through underwriting. But most people don't own their own company, and most people do just get paid an hourly rate or salary, and it's not complicated. So typically we do just pre-qualifications, and that's good.
So a quick way maybe to reference pre-qualification versus pre-approval would, in my mind, is pre-qualification would be that 30-minute phone call you were talking about just to find out what you're approved for. But the pre-approval would be when you turn in those documents and it's gone over heavily and we come back to learn we're good, or is that accurate?
That's exactly right. Yeah, that's exactly right. So, yeah, and at that point too, if you're already under contract, it would just be an approval. It wouldn't even be a pre-approval. Really with pre-approval, that's when we get everything up front and we get it to an underwriter before we do anything. So kind of how I was saying, if it's complicated, then it's a good idea to do that.
Yeah,
If it's not complicated, then we just do a pre-qualification because it's not complicated.
yeah, absolutely.
That's a great question.
Now, there was a few things that you and I had talked about not to do while you're under contract or from the time you've been pre-qualified.
Yeah, so I've got two more things. I'll skip to that. So what not to do, I've got a list of a couple things because this is super important to know.
So we should probably write this down.
Yeah, write this down. And we see it, I know from talking to Stephanie, it happens that they will do these things and you think that it's kind of silly, but I'd rather you know it because you don't do these things.
Yeah.
That's not good. The first thing I wrote was don't tell us half the story. So especially your lender, I'm here to help you figure it out. So if you get paid a certain way and you think that it's going to be looked at bad, or if you don't have money in the bank and you think that that's bad, just tell us the full story. My job is to structure things to make it work. So don't tell us half the story. That's number one. Number two, don't quit your job. I need your job. It's all based on your job. So that's important. If you lose your income, everything's based on how much money you're making, the whole process. And then I also have don't change jobs. Unless it's something that we talked about with your lender and you told the full story and you're planning on getting a promotion soon, then we'll have that conversation. But if income changes, then it changes your pre-qualification. So that's important to note. Don't go buy a new car until we close. If you want to do it afterwards, that's fine.
But what happens if I break down and my car just dies? What do I do?
I would ride your bike for a week. No.
Yep, break
Yeah.
out the old bike, air up the tires, we're good.
You can't, so when I say don't buy a new car, really what I'm saying is any kind of new debt can also affect your pre-qualification. So new furniture, that happens a lot too. People will get excited and they go get furniture.
Yep,
Which is fine. I know you need furniture. So I'm not saying you can't get it, but any kind of new debt that you take on before we close will have to be factored in. That will delay us on closing typically. And it could jeopardize things. If you were on the edge and we were having a hard time getting you qualified, getting a brand new payment might put you over the edge and now you don't qualify.
and that could be as little as just a $5 or $10 sometime, is that correct?
No. If it's
Okay.
bad at my job, if it was, but yeah, that's a good question. There is a tipping point. And I guess that's important to say too. You want a lender that knows what they're doing.
Yeah.
And a lot of times these, like the online ones, they don't. They just hire people that fill a chair. To Stephanie's point, if you did do something and you start to panic, like, oh, I shouldn't have done that. Max told me not to. I can always help you think of a way to fix it. So that's why you need someone that's good at their job. So yeah, I would be bad at my job if a $5 thing.
I like to throw it out because these are some of the questions that I
Yeah.
hear fairly often.
Right. Yeah, that's a good question too. The other part, the only other thing I wrote was don't deposit big money out of nowhere.
That's untraceable.
That's untraceable. Yeah, always. And that kind of goes with always tell the story. So sometimes people will sell something or maybe they sold land or they sold a boat or sold their car. You can use money, but we have to trace everything. If you're buying a house, all the money that you're using to buy that house has to be traced. So if there's a random large deposit, an underwriter is going to ask what it is. And if we can't trace it, we can't use it. So
what do you describe as being able to trace it? Does that mean there has to be a paper receipt or not just cash passing or?
there has to be a paper trail. So like if you're transferring money, we'll have to get a bank statement showing where the money came from. If a relative wants to gift you money, that's always allowed and common. If you've got a parent or somebody that wants to help, we just have to trace it. So they have to have it in their bank and we have to get a statement showing where they got the money and that it was in a bank account. It wasn't just a random money sitting under the mattress. It has to be traceable.
That was my next question.
I like the
Yeah, cash on hand doesn't work. You have to be able to trace where the money comes from, because if we can't trace it, then it could be anything. You could have went out and got a loan, which how we were just saying before, don't go get a loan out of nowhere, because that can affect your debt to income ratio.
So if someone does have cash under their mattress or wherever in their home, and they need to use it toward buying the home, how long does it have to be deposited in the account before it's okay?
That is such a good question. I'm very glad you asked that, because since these people haven't bought a house yet, now is the time to do it.
Yeah.
60 days. I get 2 months worth of bank statements.
Okay.
So if you've got money in a mattress, deposit it, and then we can use it in 2 months, because I won't see it going in.
So is it 2 months from the time they go under contract and we start the process, or 2 months before they start looking?
Well, I mean, you can always be looking, but I would say get under contract. It's when I get your initial documents.
Okay.
I can't see the money going in and I have to ask for 2 months worth.
Okay.
So as long as it's in the bank and it's seasoned that's what the term is. It's seasoned assets.
Mm-hmm.
Been in there for 2 months, so we can use it. So good question. That's a good one to know and write down now, before you found a house, because if you've got money sitting under your mattress and you want to use it and we can't, that can be a problem. So, and that was it. That was all my what not to do. So, I don't want to take up all the time. I do have one more quick thing that I want to mention. Just this is important things I would want to know as a first-time home buyer. I'll try to go through this quickly, and then I'll let you take it back, Stephanie. But here's just a couple. I wanted to touch base. A few loan programs. So when you get a loan, there's government loans and there's conventional loans. And I'm not going to dive into all of it other than just to say that when you call, I will help you find the loan that fits, or your local lender will help you find the loan that fits. And it'll be based on your credit, how much money you want to put down, which is, I want to say this too, that's very important. A lot of people think that you need 20% down to buy a house.
Yeah.
That's not true.
Right.
It used to be that way back in the day. So that's where that comes from. But anymore, that's not true. There's loan programs where you could do 0% down. There's some where you need 3.5% down. And then there's some that you need 5% down. So it just depends. And just because I'm going over the limit on my time, I think
You're okay.
we'll just put it at, we'll figure out what loan works the best. And each one has different benefits, but that's why you call, and that's what we do. So
And that varies by state, the different loan types too, right?
well, no. So, well, there's hundreds of loans. So you're right. There are certain loans like West Virginia housing.
Yeah.
Where we can take advantage. If you're buying in West Virginia, they have a program that'll give you up to $8,000 to help pay for your down payment and your closing costs and everything that you need for cash to close. And they give you that money in the form of a second loan. So I guess I'll just say there's 100 different loans, and working with somebody that knows them is step one. So that we would dive into it with each person to figure out what's the best thing. But yes, there are programs that fit, and they are state specific.
And I think that's another benefit to working local too, is the local folks typically have access to more types of loans than what some of the other lenders do.
Yeah, that's true. So, also I would get in trouble if I didn't plug renovation loans too. Just because they're so important nowadays, and a lot of people don't think about it. Something else to just consider when you go looking for a house, maybe you can't find the one that's perfect. That's okay. You can do a loan that's called a renovation loan, where maybe the kitchen needs completely updated. We get a contractor to give us an estimate for how much it would cost to do that. And then you can roll it into the loan. So you get one loan, you get to buy it, renovate it, and then at closing you get a house. And then after we close, then the contractor goes in and fixes it. So just something else to say for first-time home buyers, if you're looking for a house, keep that in mind. Because you might find one that's perfect, and if that you can fix that but. That's not.
That impact the appraisal fee where that comes in as well, or no?
Say that again.
The appraiser, if the appraisal comes in, and you're on the borderline, and then you look at the renovation loan that you want to roll in, does it have to still be underneath the appraisal?
Great question. So with renovation, the appraiser will have the contractor's estimate in their hand when they go look at the house. And they're just going to pretend it's done. Whatever it is that we're getting done, they're going to appraise it as if it's already done.
Okay.
So yes, it does have to appraise high enough to do it, but the appraiser knows what we're doing. So, yeah.
It'll be the current condition plus the repairs.
Correct.
One and done.
One and done. Yeah, it's not just one loan. You roll it in, and it is super simple. I do know A lot of people get scared of it, because there are some horror stories with certain lenders. I mean, you're gonna get that with anything.
Mhm.
But just to plug Stockton, we're very good at it. We've got a whole team that's just renovation, and they've been doing it for 20 years. And since I've been doing this for the past 8 years, I've never had one problem with renovation. So I'm spoiled. I've got a team that is very good. So yeah, I love the renovation loan. It can, if you find a house you love, it's kind of like you're on HGTV and you get to play around with it and actually make it into something cool.
So you can turn it from HGTV right to HG me, right?
Exactly. Yeah, you took my line. I should have said that. Stephanie, the last thing I have, and I would go over this with each first-time home buyer when they call. But it's just important to know too how payment works.
Yes.
With your mortgage payment, it's broken down into principal and interest, which is your loan. You're paying off the loan with principal, and interest is what you're paying the bank. Taxes, your property taxes that you pay, and your homeowner's insurance. You have to have homeowner's insurance when you buy a house. And the two portions I just said, taxes and homeowner's insurance. You might hear someone say the term your escrow. That's what that means. When someone says escrow with your payment, they're talking about the taxes and insurance. So property taxes, depending on your state, but where we are, Ohio and West Virginia, they're paid twice a year. Homeowners insurance, you pay once a year. And those are both in big lump sums. If you're getting a mortgage, you don't have to worry about that. When it comes time to pay the taxes, instead of you having to come up with a big lump sum of money, you've already been paying it every month as part of your mortgage payment. So what we'll do is we collect 1/12 of whatever your yearly property taxes are, and 1/12 of whatever your yearly homeowner's insurance is. And we throw it into a separate account that's called an escrow account. When it comes time to pay it, your lender pays it. So you don't have to worry when it's time to pay it. Some people don't have escrow. They do have to worry about making those payments. But typically if you're a first-time home buyer, it's just part of your mortgage payment. So that's also important to know. The other thing I always tell people, because you wouldn't know if you've never done this, is what makes up my cash that I need for closing. It's broken down into 3 different things. You've got your down payment, which depend on the loan that we do. Sometimes it's 0%. Sometimes you won't have a down payment. There's closing costs, which are just fees that are associated with your loan. So there's title fees and things like that. And then prepaid expenses. You have to prepay your taxes and insurance for a year to pre-fund that escrow account so that it does have enough money to pay your taxes and insurance. I always tell people the last 2 I just said, the closing costs and prepaid expenses, it's important to note that you can negotiate to have the seller help you pay for those. It is fairly common. I'm sure Stephanie would agree with me. Just because people don't have money. A lot of people don't have thousands of dollars stocked away.
Especially first-time home buyers.
Yes, exactly. And I guess the most important thing I want to mention is don't let that be something that you think that you can't do it. There are ways to negotiate and get the seller to help you. So in those cases where you don't have a down payment at all, if the seller is willing to help pay for the other 2, sometimes you don't need any money to buy a house. Sometimes you can get in with $0 out of pocket. And I've done that many times. That's not uncommon. So don't be discouraged. If you, like I said at the beginning, you don't know what you don't know. That's what we're here for. So, and that's it. That was all my notes.
All
We got
right,
the-
Maxwell Fitzgerald from Stockton Mortgage, thank you very much.
Yeah, of course.
Hang in with us just in case, okay?
Okay,
Want to hear anything else you've got? Because I may say something that you might be able to clarify further, okay?
I'm here.
Okay. So I wanted to talk a little bit about designations that's focused on buyer representation. Because this is really what you need to have. So as I mentioned earlier, the accredited buyer's representative, it is highly recognized and it is the only designation for a buyer's agent. Okay, that's important to know. However, there is also a real estate negotiations expert. So it is the first and only negotiation credential recognized by National Association of Realtors. This enhances your ability to advocate for clients during the negotiations. As I mentioned earlier, the pricing strategy advisor is a fantastic certification to have, just because that's the person that can go in and do the market analysis. They have the skill set because they have been heavily trained to know how to accurately price a home for the market. Now, there is a difference between a market analysis and an appraisal. Whereas an appraisal is done by an appraiser, they have a completely different way that they do it. They look forwards and backwards, mostly forwards, I do believe. Whereas a market analysis completed by a realtor is based on what has sold within the last year that is similar to this property. And there are many other criteria that fall in with that as well. Would you agree with that, Maxwell?
Yeah, that's true.
Okay. Now keep in mind, we are not appraisers. We do not have an appraiser with us here today. But I wanted to kind of talk about that. So other credentials that can benefit buyers, that's your certified residential specialist, your graduate realtor institute. Now that one, a lot of times will have the accredited buyer's representative mixed in with it if they've just gotten it here in the last 2 or 3 years, maybe. At Home with Diversity, senior real estate specialist, and military relocation professional. So those are certain designations that can be focused on buyer representation. So I wanted to talk about home shopping, and this is a very large one. It's wants versus needs is the biggest thing. When you start home shopping, sometimes you already have a grand idea in your mind of everything that you need to have in your home and you want. And first-time home buyers, this is one of the biggest areas I've seen for a time loss, because people don't really realize the needs versus the wants. And sometimes if you've never bought before, you don't always know that you can't always get everything you want for whatever price range you're in. So it falls down to what is important to me. So in the home shopping areas, if you have like 5 people in your house, or that's going to be living in the home, maybe you think that you need a 6-bedroom, but in reality, if 4 of those people are going, well, 2 and 2 are going to be sharing rooms, then you might only need a 3-bedroom. So it's needs versus wants. I need to have a garage, or I need to have a basement. Yeah, he needs a garage. But if by chance it's something that you're willing to build later, that's more of a want versus a need. If you need to have a fenced-in yard because you have a runaway dog that loves to escape, then that's going to be a need. But is it something you're willing to build or put in after you buy? If so, then it's a want. So it's important to recognize what your needs and wants are. And if you have a workbook or note taking place, then absolutely start writing down your needs versus your wants, so you know before you start shopping what you absolutely must have at a minimum. And anything above that, is wonderful. It's icing on the cake, but we've got to be able to meet your minimum. We don't want to start out looking for the most of and everything that you want and end up losing time on some good homes that might have worked. So it's important to know that. Be very intentional and realistic when you're creating your needs versus want list. Make sense? All right, so we are going to jump into offers. So when we talk about offers, this is kind of a very interesting, yeah, very interesting area. When we talk about offers, we a lot of times think, well, what is it? It's a legally binding contract, number one. And I don't want people to go into this thinking, well, if we don't like it, we'll just back out. It doesn't work that way. There has to be a legal reason to back out. Those are called contingencies, and we're going to talk about that here shortly. But one of the first things I want to do is kind of talk about, okay, so here you found your home, you absolutely love it, you want to put in an offer on it, you want to buy it. So we need to come up with an offer. And what that means is we just need to sit down and write out exactly what you're willing to pay for the property. And this is absolutely where the agents can shine, because if they know that you want to buy it, then they need to be doing a market analysis to make sure that there's not going to be a surprise when that appraisal comes in, as close to it as what we can get. But if it's far under, then we need to be advising, hey, why don't we offer a little under and see where it goes? It is always better to be a little bit under than to offer more than it's worth and then have to go back and renegotiate if it comes to that. But that could flow either way. It's important to know that, as you mentioned, Maxwell.
Right.
So other things that we'll talk about during the offer is earnest money. Do you want to put money down to say, hey, this is how serious I am about buying the property? The type of finance that you have. This is one of the reasons why you want to have your pre-approval already in hand before you present an offer. That way, if you present that pre-approval or pre-qualification letter with your offer is given much more credence and is more serious than offers that come in without that, because those may not get approved at all, whereas yours, you're already sitting pretty and it's going to be quicker, most likely. Okay. So we'll also talk about possible inspection types, contract contingencies, timelines, respond by timelines, and an estimated closing date. Other things that's going to be in there is who pays the agency fees, the commissions, if you will. And if it's going to be the seller, we need to write that into the contract as well. All right, so we're going to talk a little bit about contingencies. So some of the possible contingencies, and you'll know we make mistakes. We are human. We're live people here. So if you hear me stutter over something, it's okay. It's all right. I'm going to keep rolling. So some of the possible contingencies that you can choose to request, and typically at your own expense, are going to be something like your home inspection. As Mr. Phillip Riggs here is from Fork in the Road Home Inspections, and he will be talking with you shortly. Wood destroying insect inspection, that's going to be things like looking for termites or borbies, things that damage the wood in the property. Appraisal, survey, lead-based paint, mold, asbestos, radon, pool, hot tub, septic, and well inspection. And as Phillip said, even a chimney and fireplace is something that could be inspected in there as well. So those are all different types. Now, keep in mind, again, this is not all inclusive. There are other things that you can throw in, but these are the most common ones. Your mortgage will be a contingency as well, even if you already have a pre-approval letter. And that's a lot of times that'll be the same scenario as what Maxwell was talking about a little bit ago. You go out, you buy furniture or you buy a car, and now you can't finance. So your mortgage needs to be a contingency. Now, I'm going to go ahead and introduce to you Mr. Phillip Riggs, again from Fork in the Road Home Inspections. And Phillip, some people have said that the majority of home inspection reports come back with mostly electrical and plumbing issues. Is this correct?
It is correct for the most part. It depends on the age of the home. A lot of times where the home was built, where the home was actually located sometimes, depending on what you have. The home inspection is a technically non-exhaustive inspection, meaning we're not going to tear a wall apart. We're not going to tear the electrical circuits apart. We're doing a physical inspection at the time and the day that we're there at the house, and that's the condition of the home. So we're honestly looking for things that work as designed. Is it working as it was designed to work? Those would end up with satisfactory. If it's within its lifespan, it may end up being marginal. Are there deficiencies with it? Then it could end up being poor with recommended inspections or recommended action to be taken by the homeowner. We're not foundation specialists, so.
What? Really?
So if we see a crack in a wall, and depending on the type of crack and how large it is, we will recommend a foundation expert do an evaluation, which would go back to a contingency of somebody else paying for the repair or the inspection. Pools, not every home inspector is not a pool inspector. Not every home inspector is licensed to do mold. West Virginia, you have to be licensed to do mold. You have to be licensed to do radon. You have to be licensed to do septic. So the home inspector itself is not necessarily qualified or certified to do all of these things. So we're basically looking at the house. Now, if a structure like a garage is detached by West Virginia's SOP, that's not an inspectable service unless it's added into the inspection. In other words, if you want to negotiate that to be in the inspection, it can be negotiated in. But detached structures from the home are not part of the inspection.
Okay, so I assume that's going to be a decision between the buyer and the home inspector as far as what gets inspected, because on our offer, a home inspection is a home inspection, but on your end, it's completely different.
Yes, ma'am.
Okay.
So if you have a building out back, you have a detached garage, not attached to the home. Those are what's considered not inspectable within the realm of the home inspection. Most of the home inspectors, when you call them, are going to look up the property on the computer while they're talking to you. And these are things that can be discussed in there as well.
Okay.
If the home if it's occupied, so there's furniture in the house, there's storage stacked up on walls and stuff. Again, we are not permitted to move things to do the inspection, so these will be noted. But at the same time, that would be a discussion between the buyer, the seller, and then the home inspector as well, as it goes through the process. We don't do code inspections.
What? You don't do code?
So,
Oh, goodness.
but while we do know code, we are not a certified code inspector. You're back to the certified word again. So we will list things that will not be in compliance, and then we'll recommend either a repair or an inspection by a qualified individual. GFCIs, everybody loves GFCIs.
Oh my goodness.
But a GFCI is not always wired correctly. I can make every GFI trip if I hit the test button on the unit.
Yep.
That does not mean it's wired correctly. That's why you will see home inspectors use the plug-in device. Some other things we have talked about, the buyer or the seller can tell you the roof is a year old. That doesn't mean that you're not going to find defects within the installation of the roof itself. Okay.
Right.
So you could have a brand new water heater installed. Again, that doesn't mean it was installed correctly. If the plumbing's not right, the flue's not right, the temperature pressure relief valve extension is not correct.
Oh my goodness, that's a big one. That's on almost every single home inspection.
there's just various things that went there. We will open up the breaker panel. So one of the things for homeowners in particular with new homes, the electric companies are now, when they install the meter, the first disconnect is at the meter. That there becomes the main service box.
Okay.
That means the panel inside the house is a sub panel.
Okay,
That means the wiring is going to have to be different between the two of them. But a lot of the newer homes will have that breaker on the outside, and that is your main disconnect as far as inspection purposes go, and even code goes. That's your main disconnect outside. If you have an separate panel inside the garage, that would be another sub panel. Okay, so every time you do a tap off, that's going to be another sub panel.
okay,
When we take the cover off the box and we do a visual inspection again of the box, we're looking at the wires, making sure that somebody didn't put two wires on the same breaker lug.
Piggyback.
Piggybacking.
yeah,
Yep. Dryer vents is a one that's, dryers are not supposed to be vented to crawl spaces.
I had a home inspection. This has been about 2 years ago, where the seller had vented the dryer up into
Yeah.
between the floors of the home, and they have these office ceiling tiles. So it was literally blowing all through the ceiling of the room, and they had an issue with it. Something came apart somewhere or other. I'm going to guess a mouse or something. It started pushing it, or maybe something bigger. I don't know. But it came undone, and they ended up having to take out their whole ceiling to track back where it came disconnected.
So a dryer vent is venting the moisture from your clothes drying. So if you vent that into an attic, a floor, a crawl space, you're introducing moisture into an area that's not supposed to be there.
Which causes?
Mold.
Yes.
I just did an inspection, honestly, 2 days ago. The dryer was vented into the garage.
Oh, lovely.
So again, it's vented into an interior space, which is, again, you're putting moisture inside of it. Again, that is not an unusual thing to find either. There are some panels that are bad. Well, they're not bad, but they don't function correctly. They're older, they're outdated. Again, these are the things that we'll be inspecting when we look at your service panels, the wiring type, whether it's aluminum. Aluminum is normally the main wire coming from the pole into the house, and it'll have the correct antioxidant paste on it. Aluminum branch wiring, you don't see it very often, but it is still out there. Polybutylene piping, which was famous in the 70s, some of it's still out there.
Quite a bit, especially in homes that were built in that timeline and have never ever been renovated. And we're seeing a lot in this area specifically of homes that fall into that line.
Mobile homes fall into it in particular.
Radon. You know, radon, we've never really had many radon inspections up until the last, I don't know, 5-6 years, I think is when it's really started picking up. So can you tell us a little bit about that?
So radon is present in all the soils, okay? And it will permeate into the house based on different soil types. Radon, as it breaks down, it basically becomes like a dust in the air, okay? It's the number 2 cause of lung cancer in the world.
But it's invisible, right?
And it's invisible.
Okay.
Okay, so as it breaks down, these particles are released into the home. And it's even in natural gas. So if you have say your house has open flame stoves in it, you have free gas. So you're burning the open flame stove, right?
Okay.
It'll actually release, if it's in the ground as it comes through, it'll release it that way as well. Okay? It's in water, it can be tested for in water as well. But the biggest thing is you don't know that you don't have it, you don't know that you do have it. And the only way to test that is to have somebody do a radon test in the home itself. West Virginia, Ohio, have certified radon testers, and they're certified to go in and do those tests.
Mhm.
There's different methods of using it, charcoal canisters, electrets, the continuous radon monitor. Most of the ones that I've done run less than 4 picocuries per liter, which is what they consider the max before remediation has to start. The house I live in runs just over 4, and I've checked my own, just because after I took the course, I was curious. But it's there. Radon mitigation is not overly expensive. It runs in less than $5,000 for the most part.
Whew.
Well, when you compare that to renewing an HVAC unit.
Oh, no, I understand.
So, and basically the new homes are being built with, most of them will have passive in it. Passive means that there's a pipe in the gravel underneath the foundation.
Okay,
There's not a ventilated fan. So it can actually take the path of least resistance, just like electricity. If you end up with a high radon test on those units, you can put a fan on the outside, which is going to now draw a vacuum on it and exit out the pipe.
okay,
If you have to have it installed in your home, they're basically doing the same thing. They're going to make a pit, put gravel in it, put the pipe in it, run it outside the home, up and out, so that the radon is pulled out before it gets into the home.
very good. And I interrupted you. I'm so sorry. My burning question.
Oh, I'd rather answer them than the other things I have sometimes. Water heaters, we talked about them. HVAC units, washers and dryers and furnaces, decks even, all have a life expectancy on. As a home inspector, we're going to look at the serial number on that unit. If there's not an installation date written by the technician somewhere, it's going to be based off the manufacturer's date of that system.
Yes.
8 to 12 years on just about anything, you're going to need to start looking for budgeting. I'm going to call it budgeting. You need to start putting money aside to replace that unit unless you have a home inspection warranty that's good, which is the other option you would have for some of the high dollar equipment, which Maxwell will probably talk about that as well on some of the home inspector warranties and stuff.
That home warranty, like.
The home warranties.
Yeah, okay.
Yeah.
And that's something that could be negotiated in with an offer as well.
Yes. One of the things like we had talked about in the beginning is cosmetic versus structural.
Mhm.
Cosmetic versus an actual defect.
Yeah.
It goes back to the statement at the beginning. Is it functioning as designed? I can have a drywall that may need to be painted. Is it functioning as it's designed to work? It's holding the insulation in place. It just needs painted. It's cosmetic at that point.
Mhm.
Duct work. If it's in a crawl space, it should be insulated. It helps prevent the moisture in the crawl space. A lot of the older homes won't have it. Is it a defect? The answer is no. It's working as designed. 2-wire systems is a very good one. Okay, so the older homes with a 2-wire system.
Is this like knob and tube?
No, it's after knob and tube. Your home was built in the 70s and 80s. Room X was 2 wired that had a hot and a neutral.
Mhm.
And you'll see the outlets only have two.
Yeah.
Two, okay, that's a 2-wire system. Are they bad? The answer is no. That's what the code was at the time the house was built. And that will be the statement that's in there. Let's go back to the GFI. Can you install a GFCI in a 2-wire system? The answer to that is yes, and it can function correctly as well. There's a method for installing it, and then you label it that it's the 2-wire system with GFCI installed. The other way you can do that is you can go back into the service box and put a GFCI breaker in the service box that feeds all of those outlets and performs the same function.
Right.
So there are a couple ways to do those as well.
But let's be honest, most appliances anymore, not most, but a lot of them are 3-prong anyway. So you probably want to update them, like to run vacuums and such.
You do, because you don't want to be cutting the ground off the.
No.
The other option is buy the little adapter at your local hardware store.
You know, protect yourself. That's the important thing. Protect yourself and your home.
So one of the other things that you would ask this is, should the buyer attend the home inspection? Yes and no. Okay. The home inspector is there going through the home inspection. I would give them a few hours, and they'll normally tell you, show up at this time. Okay. And what that means is he's going to go through and he's going to create a list, but he's going to be able to go through his inspection without interruptions. From
Lots of questions, like
lots
what
of
I
questions,
do.
right? I, for one, when that happens, I lose my train of thought and I forget things. So I like to have mine show up in early afternoon. I'll have my list ready for them and we'll go through it. And that's the way most of the home inspectors prefer it, is to have some of that quiet time while they do the inspection. And then they will go through the report. So what they're going to put in the report that will come to you. And we'll go back to the report. So reports are generated. Some of them can be printed at the time of the inspection, depending on who's doing it and how they're doing it. A lot of the reports anymore are going to what's called online. Like mine is an iPad. I finish the report at the house on my computer. I get it sent up and then it gets sent out to the clients. Which comes to the next thing. When a home inspector does a home inspection, the client is the buyer or whoever paid for the home inspection. By law, we are not permitted to share it with a real estate agent.
Yeah.
Unless the client specifically designates that we share that report. That's one of the things we have to be very cautious of on the reports, is the client is whoever paid us the money.
Yeah.
And that's who the report gets sent to unless designated otherwise.
Yes.
Can I add to that too?
Yes, sir.
That goes for me too.
That's for the appraisal.
Well, no, the home inspection is, I tell people how important it is, but it's not something that comes to me. It's something for their benefit. It's not something that an underwriter gets. It's something that they use to their benefit, but it doesn't have anything to do with my side of things.
Right.
So just like Phillip said, I won't get it. That'll be for you guys. And so, which is good, because we don't want to see it. You guys can determine everything yourselves. So
I am going to plug right here real quick, and I'm sorry. I'll come right back. I'm sorry. But I am going to plug here that same goes for an appraisal, though, because that belongs to the bank. The bank or your mortgage lender is actually the client in that case. It does not go to the buyer. Is that correct?
so it goes to the buyer because the buyer paid for it. But the
Okay.
buyer gets to do the same idea. They get to share that information how they want. It's their information.
But you don't send it to any realtors. That's important to know.
Unless the buyer asks me to. If they give me permission to send it to a realtor, then I can.
Yeah.
But it's theirs. They paid for it. It goes to them.
And I think it's important to note who should have access to what. So this is all very helpful information. So thank you. I'm sorry, I interrupted.
Okay, we're on reports because you want me to talk about the color codes.
Yes, yes. This is so important because people get these colorful papers and don't know what it is and they're asking me. But here's the time. You're hearing it straight from the man.
So the reports will normally be split up into satisfactory being green, marginal being yellow, poor being red, and safety being a red. One of the other things is there's what's called a summary section. So these reports anymore are 30 to 60 pages long, has pictures and annotations and evaluations of the specific systems in the house, components, sinks, faucets, the whole ball of wax. Towards the front of the report, there's going to be a summary section, and that summary section is where we point out to the client the things we believe are important for them to notice right up front. And then that same information is down in the body of the report in the sections that it pertains to. So for like one of my reports, if you view it online, in the summary, if you click on it, it'll automatically take you to the body of the report where that information is, and you can look at the pictures and see all the rest of the information that was annotated on it in there. So that's sort of how they're set up. Like I said, satisfactory, marginal, poor. It's also going to depend on the program that the inspector is using, and what association they're affiliated with. So there's InterNACHI, there's ASHI, there's a couple other ones out there based on where your training is, what your standards of practice are. Each state has their own standards of practice. West Virginia has them, which we have to abide by. There's things in there that specifically say that we don't inspect. So like a window unit, not inspectable. Installed central air system is inspectable.
Yeah, but that comes back to personal property versus real property too.
So there's specific things, like I said, that are in there, that they tell us we have to inspect. And then there's things in there that's not. And all of these things will be part of the contract that's signed before a home inspector starts his inspection. So there is a contract that is signed between the inspector and the client, and any additional services, being the radon, the septic, the well water testing, the mold, all of that stuff that would be what's called an additional service would be called out in there if that's what the inspector is going to do.
Okay. Very good.
New construction you brought up.
Yeah.
Also, it's beneficial. I know the builder's going to tell you it's a perfect house. Doesn't mean it's a perfect house.
Right.
Again, home people that flip homes. It falls almost into that same category where the construction will be done. That doesn't make it right. It's still beneficial to have a home inspector come in. On your high-end home, the cost benefit analysis, if you wanted to look at it, you're paying over $100 a square foot for a home, and you're looking at average is about 20 cents a square foot for an inspection.
Okay.
So it's plus or minus if you were to look at it, depending on the inspector and what they're doing. But there's usually a minimum that they won't go below based on the size of the home. In other words, it's going to cost you the same for an 800 square foot home as it is a 1,500 square foot. And then once you start going up, the prices will change. But that average is in there is about 20 to 30 cents a square foot for an inspection, depending on who you get and what all it entails, and what the ancillary services will be as well. It is beneficial. Even if you're paying $30,000 for a home, it's still beneficial, I think, to have an inspection done so you know what you're walking into.
I think it's very important to always have it done, because not only does it cover, you know, what's the red, yellow, and green, the condition of the home, but it also goes in to give maintenance tips, right?
So there'll be things in there like you had talked about as well. Where's the air filter located? Where's the gas shut off? Where's the water shut off? Those are the things that will be in there.
And breaker box.
Breaker box, where's the breaker box located? Is there a sub panel somewhere? Let's go back to one of your first slides.
Okay.
You found your dream home.
Okay.
Now what?
Oh, yes.
Have you went in the attic?
Oh, no. Not happening.
Have you went into the crawl space? Okay. Where I get at with this is back to the SOP. We're required to go into those areas to give an evaluation of the home. So you found your dream home, but you didn't check the dark corners. All right. So that's sort of where we come in, is we are going to check your dark corners.
You're going to check the whole house,
Yes,
top to bottom.
Yes, ma'am.
And that is vital. Because people like me, I have never, ever seen the inside of my attic, and never, ever will I ever stick my head underneath a house. It's just not happening. It's too terrifying. I am not built for that. I am an expert in selling real estate and buying real estate. I'm a great realtor, but I am not the person to crawl under a house. It's just not happening. Do you have anything else you'd like to share?
Oh, yeah.
I'm sorry, I probably shouldn't have said that, but no, it's true. All right, so let's talk a little bit about your offer. We've kind of already jumped into the offer itself, but after you've made an offer, well, you know what? Let's pop over this. I know we talked about the different types of contingencies, but negotiations is something that is vital. So once you've submitted your offer, waiting for an answer, my gosh, it can seem like it takes forever. But when you finally do get an answer, you're going to start into what's called negotiations. And here is the scenario. You know, when they respond, it can go one of three ways. Either the seller accepts the offer, they counter offer for terms that's agreeable to them, or they can decline the offer. And I will tell you, no answer is a decline. Just be prepared for that. And once they send back their counter offer, if they choose to counter offer, then it comes back to your side and you have to choose to either accept, counter offer, or decline. It goes back and forth, but those are the three steps you're going to see over and over and over again in buying a home. It's accept, counter offer, or decline. And that's going to be true with home inspection repairs or appraisal repairs as well. You write a repair agreement and they can either accept, they can counter offer, or they can decline. So we'll cover that here in a few minutes, but accept, counter offer, and decline is the big takeaway for that. So now what? So again, if they've accepted, congratulations, you are officially under contract once all the documents are signed. That's important. Celebrate, go out and have some whatever and enjoy, relax, because now it's time to get to work. However, if the seller counter offers for terms more agreeable, again, you have that option to accept, counter offer, decline. You'll hear it over and over and over, but you have the choice. If they decline, you can go back, you can walk away if you choose to, because that is their counter offer. It is a new offer, so you have an option to walk away should you choose to. I want to be clear. Once you have signed and accepted, it is a legally binding contract. But until then, it is not signed by everyone. If you choose to back out of something that you have already offered on or sent over to the other side, then that has to be rescinded in writing. And I know I'm going down a rabbit hole. That's nothing we need to talk about now. But if you ever get in that scenario, talk to your realtor about anything that you're considering so they can talk to you about what that means and looks like for you. The important thing to know is always consider it a legally binding contract, okay? Now, okay, contingency timelines. Oh boy, oh boy. So this area here, know what the contingencies you've chosen. Like if I need to have a home inspection, I know it can take up to 10 business days to get that because home inspectors are very busy. Not all of them make you wait that long, but some of them, it can take a few days, okay? If they can't get you on the schedule until 8 or 9 days later, well, you still have to have time to get that report back. So you have time to sit down with your realtor to go over what kind of repairs are needed for the home. And hopefully your realtor will know what kind of repairs match what an appraiser is going to look for as well, for the loan type. And that will vary depending upon the loan as well. So you need to allow time for that. So 10 days typically is what we recommend to people to put in on the contingency timeline for a home inspection. Then there are things like your mortgage.
If I might jump in there,
Sure.
for the home inspection, if you choose to do a radon inspection,
Oh, yes.
minimum of 3 days. Then, because there is the soak time, then there's the 48 hours, the actual time. It's about 60 hours, but if you want to look at it, it's 3 days. So if you choose to have a radon test done, it's 3 days. So there's 3 days taken up before the home inspection even starts with a radon.
So that can run you over 10 days if someone can't, but usually if it comes down to that, the home inspector is gonna get that done right as soon as the 3
We
days
will
are up.
like I will go in 3 days before the scheduled home inspection, so that on the day of the inspection, I'm picking up my equipment and
Yeah.
taking it out of the house.
Yeah.
And then you just populate the report, at the end of the home inspection report, but radon in your mind is a 3-day test. It's not go in, take some numbers and walk out. The standard, national standard, 3 days, 60 hours.
So that actually brings up another thing that I wanted to talk about when we got to inspections. And that is that Lowe's, Home Depot, and all those have certain tests like radon, lead-based paint, asbestos. And it's important to note here, while you can use those tests, it will not count as a test in an offer or a contract because it is not completed by a qualified inspector or qualified personnel that's licensed and trained in how to do that properly. So I just wanted to kind of cover that in case someone was thinking, hey, I can just go over here and buy it and it's done. It's important to note that. Were you going to say something, Maxwell?
No, that's good to know. I think that's a very good thing to know as a first time home buyer.
Okay. Thank you. You looked like you wanted to say something, so I thought I'd throw it out there.
I was just agreeing with you.
Okay. So once the seller receives a repair list, they can, number one, either accept the repair list as written and choose to make all the repairs, They can counteroffer and ask you to do the repairs or ask you to help with the repairs, or they can decline. If they decline, then it's back to your side, or counteroffer, it's back to your side. So I'm not going to go over that whole process right now in the interest of time, and it may not even apply, but talk to your realtor if that comes up because they know the right steps to go next, okay? So, legally binding contract. That's the most important thing. And guess what? We are almost at the end of your home purchase. So pre-closing, oh my gosh, you are absolutely getting excited, I'm sure. You've gone through the home shopping, the pre-approvals, the offer, the inspections, the negotiations. Now it's time for the lender to send it to underwriting for the final approval. And as a reminder, make sure you are not opening any credit of any type, as Maxwell said, until after your home purchase is complete. And Maxwell, I wanted to ask something right here. So I have heard that there is a delay after the closing table in what can still mess up a loan. Is that correct?
It just depends on what we're doing. Sometimes there's a 3-day right to rescission. So after we close, technically you could still back out 3 days later.
So if I went out and bought a car right after closing, same day, and it changed my debt to income ratio?
Most of the time, no. As after closing and we're signed, you're good.
Okay.
Typically, that's the truth. It's not. Yeah.
Okay, that's good. That's good. I know these are, again, some of the questions I keep hearing over and over because when you tell them, don't go out and do this or this or this until after the closing, there are some questions that pop, and these are some of them. So once we have gone and we've sent everything out to underwriting, there is going to be a bit of a wait here, and that is okay. That's good. It is nerve-wracking sometimes for buyers because it's taking so long in their minds because they've never been through this. They don't know how long to expect, that they start to doubt and worry. And so everyone's making tons of calls. Hey, what's going on? What's going on? And it really heightens the anxiety levels for the buyers. So I just want to say it takes time. Relax. We will walk you through it and just plan for a process of anywhere from a couple weeks to a month to 2 months, I would say in most cases, unless it's cash. Okay. So it's important to know that during this time that you're waiting, you can make an appointment to go back into the house and do measurements for things like your windows or room sizes, your layouts. These are things that you can do while you're waiting. The other thing you can do is double check your driver's license. Make sure it is current. And I see Maxwell, yes. It's important though. If you get to the closing table and you have a license expired, what happens? Maxwell?
To be honest, it has not happened to me.
You're lucky.
I have people that will give me an expired license up front.
Yep.
You tell them their license fixed. I need a better license. It's gonna expire before we close. We'll let them know. So I haven't had it happen at the closing table because we do get a license day one.
Yeah.
But you got to get it updated.
Yeah, absolutely. And you'll notice a lot more realtors are asking for verification of identity, such as a driver's license or a state issued ID, something, because of all the scams that's going on right now. And it is huge. So please don't be offended if you are asked for that right up front. Once you have been given a closing date, now is the time you start making the calls to the utility companies to have the utilities turned on for the day of closing. If you don't, yes.
We had talked about this as well. Make sure the utilities are on for the home inspection.
Yes, yes, we did talk about that. Yes, because they can't do what they need to do if it's not on. I mean, how do you check the heat and the air conditioning? Although right now I wouldn't want to check the air conditioning, but I mean, it's important.
And it happens. I've had it happen to me 3 or 4 times already. So it happens. So
yeah,
utilities again, yes.
Yeah. So you it turned on. I'm sorry.
Same with appraisal. We want you have to make sure utilities are turned on.
Yes.
Yeah.
But it needs to be turned to your name for the day of closing. It needs to be in the seller's name before that. Schedule your moving truck if you need to have one, or U-Haul, whatever you need. But the last thing you want to do is either the day before or the day of closing, go back and do a final walkthrough. That house should be in just as good, if not better condition than the day you saw it and offered on it. That's important to know. Make sure to view the lender's settlement statement for accuracy with your buyer agent once you receive that. That tells you how much money you need to bring to the closing attorney's office the day of closing. Your buyer's agent will verify, then be able to tell you whether the funds need to be wired to the closing attorney's office or whether you can bring a bank or cashier's check, money order to the closing. If you need to do a wire transfer, the closing attorney's office will send directions. Now, here's an important note due to all the scams and stuff that's out there. Please be absolutely certain that if you do receive an email for a wire transfer request or instructions, that it actually did come from the closing attorney's office. And how do you do that? You reach out directly to them, call them, say, hey, I just received this email with wire transfer instructions. It says it's from you. Is it valid? It's important to do that. Protect yourself, because This is a huge amount of money. Whether it's $3,000, whether it's 150, whether it's $1 million, it's still your money and it's your investment. So protect it. There are scammers out there that is so good at what they're doing. It makes it so hard on the rest of us. You've just got to protect yourself. All right, so now we're going to talk about the closing. And I hope your hands are well rested. Whatever hand you write with, as Maxwell was saying, your hand is going to be so tired by the time you're done. And you're going to go, is there more? Yes, there is. Bring your photo identification that is current. And here's the important thing for us realtors and probably for lenders as well, Maxwell, capture the happy moment. You may not want to see this picture today. You may not want it right now, but someday you're going to look back on your home purchase and you're probably going to want that picture. More than that, Maxwell and I, we love to have those for our advertising. It's our bread and butter, and it's our way of saying thank you to you. Okay. Now, I am going to pop over to the next screen and just kind of recap what we've got here. So the home buying process, we've talked about pre-approval and pre-qualification. We've talked about home shopping. We've talked about offers and contingencies and negotiations. We've talked about offer decisions, pre-closing and title work, and closing. But realistically, there is actually 3 major steps to get you started, and we'll get to that in a moment. Right now, these are just some of the statistics that you will find in real estate within the last couple of years, and I'm going to give you just a moment to look that over. Some pretty interesting statistics there.
I'd like to point one out, if you don't mind.
Is it the one that says 1?
Yes, because I had that in my notes and I completely forgot to say it. And
Yes, go for it.
one thing I always tell people at closing this, it's kind of my cheat sheet to take away after you buy a house. But it's great. I mean, it is something that you should know. So like there, what it says is if you make one extra payment per year, it can reduce your loan up to 7 years. It's between 6 and 7. But 7, that's correct. It's about 7 years. And you save a lot of money in interest by cutting that off your loan. I always tell people the cheat code to do it without even realizing you're doing it is instead of making one payment every month, if you can, set it up to where you're making half a payment every 2 weeks. And the way it works, because some months have 5 weeks in them, if you do it that way, by the end of the year, you actually made 13 payments instead of 12.
Yeah.
So you don't see it. You're making an extra payment a year and you're not even realizing it, especially if you get paid every 2 weeks, where it just comes out of your paycheck. And you save thousands of dollars by paying that loan off early.
So can I ask a dorky question here?
Yeah, sure.
I brought out the dorky word. So if you do that and pay every other week, and then at tax time, you make one extra full payment, does that make it pay off up to 14 years earlier?
If you, I'd have to sit down and do the math to see how.
I know I put you on the spot, sorry.
Oh, it's just based on your amortization schedule, if we're gonna be very dorky. So there's not a quick, it's not just add 7. But that's a great idea. I actually heard I went to a closing recently where the closing attorney said that exact situation. They said, instead of making half a payment, if you don't even want to bother with it, what I would do is you're going to hire an accountant and they're going to do your taxes this year because you've got mortgage interest that you've paid and you can deduct that.
Yeah.
So you're going to get more of a tax refund this year and you're going to throw that at the house because that's what you're going to do. So that's another idea. Yes, at tax time, when you get your refund, if you don't want to worry about making an extra payment during the year, use your refund to do that. So you can save thousands of dollars by cutting that time off your loan.
You just don't even notice it with the 2 weeks, though. That's pretty fantastic. I didn't know that until we talked.
Yeah, if you set it up that way, it feels normal if you get paid every 2 weeks.
If you set it up with a extra $200 of a payment to the principal, that would be similar to the same thing, correct?
Depending on how much your payment is, you can always just make extra payments towards principal. And depending on who the servicer is that has your loan, meaning who's collecting the payments, you'll want to call them and tell them this money goes towards principal. Just that's me. I'm kind of OCD. If I'm making an extra payment, I'm calling and saying this goes to principal.
Understood.
So my brain is going down a rabbit hole on this, and now I'm thinking, so if by chance you do it this way to where you're just paying extra on principal, the interest is still going to build though, right? The whole
No,
time.
No.
it would be an extra payment. So
Oh, extra. I'm sorry. I gotcha.
so the first
You're actually
payment,
taking more money off the,
The full amount.
not the principal, the interest. Because you're paying the principal down with extra money, it automatically should knock the interest down as it goes throughout the year, because it would be less every month
Mhm.
by that amount, so.
yeah.
All right, I just went down.
If you do make extra payments, you're speeding up. This is the dork term, but I'll just say it so that it makes sense. So your amortization schedule, your first payments are pretty much all interest. And then as you pay your loan off, at the end of your loan, most of the payment is all principal and a little bit of its interest. So
Yeah.
making payments, you're speeding that up. And as Philip was saying, yes, your interest would be going down because you're moving down the amortization schedule faster. So more of your payment from that point forward would go towards principal rather than interest. So
Brain was not working right. But I do have another question.
Yes.
There has been a lot of speculation in the news lately that there are going to be 50-year mortgages, and my brain is going, oh no, think of that interest on that loan. People are going to go into debt so quick. So what are your thoughts on the 50-year mortgage?
I have a lot of thoughts on the 50-year mortgage, and I'm sure they will change as I do them. If I do them, I don't know whether it's going to actually pass or not.
Right.
My initial thoughts on the 50-year mortgage are that sounds a lot like renting to me.
Mhm.
You're going to be 80 something when you pay off your house, and you're not building equity very fast because it's dragged over 50 years rather than 30. But you also, I mean, it depends. If you're not staying in that house forever and you plan on only staying there for a few years or 5 to 10 years and then selling it, it can help lower a payment.
Yeah, but you don't have the equity then.
You're not going to have very much equity. Yeah, I'm personally not a big fan. But I don't know. It'll depend on just looking at it with each person, if it actually makes sense or not. You wouldn't be building equity very fast. So I would say it's probably not the best idea. It will lower your payment. So that could be helpful.
To get
But-
more people into homes now versus having to build up and wait.
Right. But if you're using it to buy your forever home, I can't imagine spending 50 years to pay something off. That's crazy. I mean, you can always pay off faster, like we said.
Yeah.
But yeah, I don't know. It'll depend on, I think, every situation. If I were not going to live there forever, it would be a little bit more attractive to get the payment down just because I'm going to be there for, I don't know, 5 years and I know I'm moving on. Then it's not a completely bad idea. It just depends. I don't love it, but I think every scenario is different. So it would just depend.
And we really don't know the parameters of what it's going to look like or how it's going to function if it comes to light. So from what we are speculating today, it might or might not be accurate at all. I just wanted to get your thoughts on it for now, though.
Yeah, I have a bunch of mixed feelings on it. Pretty much, I like to help people make the best decision, so I'm not necessarily for it. But there might be a situation where if we know going into it, the plan, then it might be useful.
Mhm.
But just a comment with everybody.
All right, so I'm gonna switch our slides here. I think everyone's had plenty of time to look over that. If you are interested in wanting to know, are you sure you should be teaching this because, you know, you couldn't figure out the interest on the extra payment? These are some of the testimonials that some of my clients have shared, and you'll find them on Google and you'll find them on Rate My Agent, where every single testimonial or comment is verified as an actual home buyer or home seller. So as I mentioned, there are 3 steps to begin your success. Decide what lender you will use, research your real estate agents, and I cannot say this enough, look up reviews, find out, ask around, and ask them if they have used them before, not just a friend of a friend used them, but find out personal experiences, and then set a time up to go through a property, make sure you match real good, and begin your home buying journey. It sounds like we've given you so much information today, and it's so important, every single piece of it, that is exactly why we wanted to be here with you to kind of go over this. If you feel that I provided value to you and you would like to book a consultation, please let me know. You can scan the QR code. My contact information is here. Maxwell, would you like to share your information as well, please?
Yeah, so we can also put it, I think when we post this, we can maybe put something just so it's written in numbers too.
Yes.
But my phone number, I always give out my cell phone and I don't have hours. So if even it's after 5, people are welcome to call me or text me, or on a weekend, we end up being good friends by the end of it. So anyone can text me. But my number is 740-434-7888. And then my email is just my name. It's max.fitzgerald@stockton.com.
Very good. And Phillip, would you care to share your information?
My website, Fork Road Home Inspections LLC.com. Phone number is 304-935-0074. I'm available. Phone is normally on until late at night. So I'm sort of like the rest of you. If you were to call me late at night, there it is. I will throw a plug in for myself. I get my home inspections out within 24 hours. So you get a home inspection, I will have the report in your hand within 24 hours.
And that's pretty fast. I've seen some where it takes about 4 or 5 days to get them back. So 24 hours is very good. Very good. All right. Anything either of you would like to share from here?
I think the only thing that I would say, which if they've made it this far, then this isn't necessarily even that important, but if maybe they skip to the end just to hear what we had to say, everything we just said, we know it. You don't have to memorize anything. That's what we're for. And then to use local real estate agents and local lenders and home inspectors, because they can communicate with each other. So that's what we're here for. Just find the right people and we'll help you.
Very good. For you, anything else?
As we said, we're out there, like you have also said, certified, check the certification. There are people out there that will do it without the certification.
And it doesn't count in a contract.
It does
they
not
don't
count
have
in a contract, and if you file a grievance or something, it doesn't apply.
Right.
Nobody to hold them accountable.
And I think an area where I see that happen a lot is young people specifically go in and buy, or even a first time, but where I have seen it the most is younger people go in and buy a home. They don't know what they're looking at yet. They haven't been through this before, and they haven't been around homes a whole lot other than the one they grew up with. They don't know what they're doing. So they ask a family member or a friend to come in and check it out. But that wouldn't count.
It doesn't count, in the sense of if there's something wrong with the house, there's nobody to go back to and ask the question. I think all of us has been very specific, ask the questions up front. You know, I might not be the fit for you, but I know people. Max knows people as well, same situation as well as a real estate agent. We're available for information. We just gave our information out. What are you looking for? What do you need? I think there's enough assets here for us to provide information.
Right. And I want to clarify, when I said a friend or a family member or neighbor or whatever can't do it, it doesn't count. They can if they are certified or if they have the right credentials to do it, okay? Maxwell, you were about to say something.
I lean back.
Okay, very good, very good. Well, we do want to thank you very much for attending the first time home buyer webinar. If you do have any further questions, we're going to make sure that you have all of our information. We are always more than happy to assist you in any questions from today or any questions you have going forward. We're going to let you guys ask us any questions you want. Please feel free to reach out to any of us. Thank you so much for joining us.
Thank you. And I will say this, Stephanie, thank you very much for inviting us to be.
You're very welcome.
Yep, happy to help and excited to talk to some people and help them find some homes.
My pleasure entirely. We're all doing this for the same reason, and it's for the buyers, you know, help them learn what they need in order to succeed, right?
Yep.
All right. Thank you guys so much. And I appreciate you two
Thank you.
coming and joining me today.
Thanks.
You guys take care, and thank you so much for being here.
Thank you very much.
You
All
know.
right. Bye-bye.